Hello, everybody, and welcome to the session by Geojit Financial Services. The markets today are extremely volatile, not just in India but throughout the globe. It has been mainly driven by economic news flow and political news flow. We have with us Dr. Vijayakumar, Chief Investment Strategist at Geojit Financial Services. Welcome to the session, sir. We also have with us Mr. Dileep K, who is the Portfolio Manager for Geojit Financial Services. So, welcome to the both of you. So, Dr. Vijayakumar, let me start off with you. The global markets, although it had a good start in 2018, especially during the last 2 or 3 months, we are seeing a little bit of a downturn, especially in the US economy, with some experts calling it a mild recession of sorts. What is your viewpoint? What has been the news flow regarding the global markets in general, with special focus on the US economy and the developed markets?
Globally, there is a major scare in the market right now. There is a growth scare. And the growth scare is that in 2019, the global economy will go into a slowdown. I don't think that global economy will go into a recession. There is not even a remote possibility of a recession, but there is the possibility of a slowdown. In 2017 as well as this year 2018, the global economy has been doing very well because the US emerged as the powerhouse, as the engine of growth, and now there are some concerns as far as the US economic growth is concerned, but that can be positive for the markets. Because if the US is slowing down as most people expected it to in 2019, the Fed need not go on an aggressive rate hike because till some few months back it was believed that the Fed will raise rates at least by 3 times in 2019. So if the US slows down and the global economy also slows down, there is a possibility that the rate hike will be very mild. The Fed has already become very dovish, so that can be positive for the markets.
Right. So you termed it as a global slowdown instead of a recession. So this global slowdown has it, as you said, of course, it can have positives and also a little bit of negatives for India, because when you talk about the China-US trade war, I mean, we might be affected. The entire slowdown can have a negative effect on India. So what is your views on the Indian economy and the current scenario that it is facing 2018 as well as going forward in 2019?
Well, in 2018, 18-19 financial year, 3 more months to go, India will be ending with a GDP growth rate of around 7.3 to 7.4. That will be the best growth rate among the large economies of the world. Now, even if the global economy slows down, India will continue to be the fastest growing economy, large economy in 2019-20 also. But then if there is a substantial slowdown in the global economy, well, international trade will be impacted, crude will crash, impacting international trade, but crude crash again can be very positive for India. But then we are not seeing any slowdown in the Indian economy going forward, even though the global slowdown will be marginally impacting India. The positives are, as far as India is concerned, our inflation is now at a 1.5-year low. CPI inflation is 2.33%. That is well within the RBI's comfort zone. Therefore, it is quite possible that the RBI may move from the calibrated tightening, that is the present monetary stance. The next monetary stance policy announcement, they are likely to change the monetary stance from calibrated tightening to a neutral policy, and very soon there is even possibility or room for monetary accommodation. The RBI can even think of cutting interest rates, particularly with the new chief at the helm.
So good time for the debt markets also?
Yes, that will be very good time for the debt markets, because bond prices will be going up. Already it has started going up. So of course, as you said at the beginning, times are going to be volatile, but then this will be a right time for some stable investment, whether it is through PMS or mutual funds or direct investments in stocks.
Right. Coming to you, Dileep, we have various investment options that are there in the market, and considering the volatility and what Dr. Vijayakumar was saying, about stability in your investments, what would you suggest about managing portfolios. Clients can have a managed portfolio. Would that be a good option in this current market?
Yeah, as Dr. Vijayakumar rightly pointed out, market is continue to be volatile for next to few months. So when if there is a volatility in market, there is a right time to invest, because we get a lot of opportunity to pick right stocks from the market. But picking right stocks at right time is very important. An investor who knows about the market and he got information about the market can easily pick up good stocks, because a lot of stocks are available at cheap valuation. In the mid cap and small cap segment, lot of stocks are there. But very important thing is the investor should know that which stock to pick up. If a client doesn't have that type of knowledge or information, can rightly go to indirect way of investing in the market. It can be through mutual fund or through PMS.
So, why would anybody choose a portfolio managed service over a mutual fund, or vice versa? And which one would you suggest, and what are the advantages of choosing a PMS over a mutual fund?
Yeah, both are indirect way of investing in the market. Both go to fund manager manage the money. But the key difference is PMS is meant for high net worth investors who can deploy 25 lakhs minimum at one stretch.
That is SEBI mandated.
Yeah, that's SEBI mandated. That's not the case with the mutual fund. Anyone can start with 5,000 rupees in mutual fund. Other important thing is a portfolio manager got a lot of flexibility in terms of deploying his funds in the market. It can go up to 100% cash at any point of time. So that is one important factor. Other one is can give a customized advice to the clients. Customized advice in terms of if an investor doesn't want to invest in a particular stock, or he doesn't prefer to own a particular stock in his portfolio, it can be automatically set to exclude that stock from the portfolio. That is possible stock-wise or sector-wise. So that is not available in a mutual fund. If an investor like to invest in a particular mutual fund with an investment objective, he has to stick with that investment objective.
Right. So you're saying it can be customized, and it can also be.
It's a flexibility. Other important factor is transparency in investment. So the portfolio manager, all the portfolio management services companies, they give update to its clients. There is a comprehensive communication with the client in terms of the performance of the portfolio. It can most of the portfolio advisors, they give online access, so 24/7 the web access will help the investor to see what's happening in his portfolio, what is the asset allocation, what is the basis of cost of each stocks, and the asset allocation and the portfolio performance compared with the index. So these are the advantages of investing in a portfolio management services.
Right. So coming back to you, Doctor, as Dileep was saying, for the uninformed investor, a managed portfolio would be better, at least in the current market scenario. Going forward, what would you like to advise? What is the ideal investment strategy that an investor can follow? For the beginner as well as for the experienced investor, what would be your suggestion for that?
A very important message that I would like to convey to the retail investors is not to chase small caps and mid caps. If you look at the performance of the market this year, so far this year, from January 1st to mid-December, we will find that Nifty is up by around 3%, but the Nifty mid cap is down by 17%, and the Nifty small cap is down by around 30-31%. And I've been looking at the performance of the 25 or 30 top wealth destructors, not wealth creators, in the market. And there are many stocks which have destroyed wealth by 50, 60, 70, 75, up to 85, 90%. And in these stocks, the retail investment has been going on increasing. They have been catching
in spite of the huge.
Yes. In spite, even when the stock prices were correcting, they were continuing to buy. And I was also looking at the mutual fund investments and FII investments in the stock. FII investment is very negligible, but mutual funds investments also, the institutions, whether it is foreign or domestic, they have been reducing their holding in these low-grade stocks, which were facing this price erosion. but retail investors have been catching the falling knife,
Right.
so to speak,
Yeah.
right? That is a mistake that they should avoid, because as Dileep rightly said, vast majority of investors do not have the expertise and time to pick the right kind of stocks. If you have got the expertise, fine.
Yeah.
Therefore, they should not do that, right? They can, if they are particular about investing in stocks directly, they should choose large cap stocks, good quality stocks with a proven track record. And there are some good quality mid caps also with a good track record. If you are investing in mid and small caps, that should be only through the mutual fund route, right? Since mid and small caps have corrected now, I think it makes sense to make even some bulk investments. Till during the last 1 year, we have been telling investors not to invest in bulk, even in the mutual funds. Those who had money to invest, we asked them to do systematic transfer plans. But now, yes. But now, since the small caps have corrected and the valuations also look reasonable, even bulk investments can be done in mid and small caps, provided you have a time horizon of more than 3 years.
Right. So thank you very much, Dr. Vijayakumar. Thank you very much, Mr. Dileep. As the experts were saying, there is a general global economic slowdown that is happening in spite of, the US markets falling down around 12 to 14%. We are seeing a global slowdown, but that can in fact have a benefit on the Indian economy. As Dileep was saying, for the uninformed investor, it would be better to go with a managed portfolio, either through your portfolio management services or through the mutual fund route. Even if it is, either of the managed portfolios, it would be better to concentrate on the large cap or the multi-cap portfolio for information. So thank you to both the experts over here. Thank you very much, sir. We would like to wish all our viewers, all our clients a very successful 2019. Thank you very much.